Hey guys, this is Julie. Going to do an instructional video on how to put the indicator on the chart. Now that you have your NinjaTrader indicator for JATS PT, I just right click the chart. This is a NinQ 15 minute, and I choose indicators. And there's going to be a folder called JATS indicators. And the PT2, the very top one, just click it one time. It puts it down in your configuration box. That way, if you want to make any changes to the indicator, you can change the period. You can change the calculation value from session open to close. Session open starts, so if you're doing a 15-minute bar, it would be the open of the 15-minute bar for whichever time range you choose. So you can choose, say, the 15-minute, or if you wanted a distribution for the 60-minute, you could make it a 60-minute distribution, or a daily, or weekly, or monthly. And we'll look at some of the higher time frames on a different chart. So for the oscillator, the PT2, it measures three things. It measures the range for that time period that you just chose, so time and price, and it will give you an approximation for the range. So probabilities for what that range might be. So PT123, 34%, 68%, 95%. So you can just say OK, and it's going to tell you what the probability of the range is going to be for that period of time in that threshold of 1 to 100. So you can see that occasionally you will get your 100. It hasn't happened a lot because the ball has been so crushed, the range has been so contained, but every once in a while we'll find that 100 and even exceed it, possibly. But you can see that when the ball is going out and the range is expanding is when the engagement in the market is particularly advantageous, shall we say, because we know the range is expanding up here. And so when we choose to engage the market in those conditions, especially when the slope is going straight up, that's when the range is going out versus when it comes back down, the bars get much smaller and the range collapses on itself. So the bars can go long or short in range expansion. And lately, up until Friday, they were all long ball longs primarily. And I think that's changed. We might start seeing some short trades going into next week for various reasons. You have OPEX, CPI, and then expiration after that. So definitely some time to be expecting the ranges to expand, possibly. So we will know because we can measure it. Another way to get the measurements for the PT2 is by a time series. So this is by minute. So you can change either, like I said, to a higher time frame. So you could measure to say what are the daily uh, one ranges right here. I like to look at a daily bar when I do this. And same principle, the range will be expanding or contracting. And you can see that it can get here, we got up to 6 sigma. Okay, so you'll notice that volatility will get up to a standard threshold level like 300, which acts more or less like the pin. So you can see that we've been contained under 300 for range expansion all the way back a year. I mean, all year it has not hit 300. The entire 2023, in fact. So 2022 was the high vol period, and 2023 was the low vol period. So we are approaching a flip, though, where we're going to hit that possibly threshold to the downside. See what I'm saying? So we might have a range expansion opportunity from 3 to 4 on the daily. So we'll definitely want to keep our eye on this. There's 400, that might be a little too strong. Oops. We'll just put one on for 350 real quick. All right, so there are some targets, some volatility targets that I want to watch. Look over here in October, um, and this one hit it and came back. So these look pretty good. And here was your breakouts, 3 peaks, and a big breakout. Um, I like to measure this also as a line, 3 lines, and that way I can put a 1 period on top of it so that I can see it better. And so let me load a template I saved so you can put the plots as lines instead of bars, and that will give you the lines on the chart. And when I add another instance of the indicator, the PT2 threshold, I can put a PT3 and 95% of the range in a 1 day, 1 period. So I have saved a template for that. So day 1 period. I'm only showing the PT3, but I colored it white so we can see it when I put it on top of the other indicator and hit apply. There we go. So now we can see the 1 period on top of the daily distribution. So you can see that we have been elevated above the distribution, showing in an elevated range compared to the prior. If you're inside the distribution, see down here between 12, 19, 26, most of that month, you see how the bars were real small and flat. But when you get outside the distribution, you get the range expansion opportunity. So seeing the 1 period outside the 14 period is, representative of that range expansion. And here, I mean, you can see that we gapped down, and then it went back up, and the volatility comes back inside the distribution, and that's when it floats up. So definitely when you're inside the distribution is when you would be want to be looking for long opportunities in particular, especially in an uptrend. So any dip below the middle line, so it's 34.68.95. So any dip of the volatility coming outside the distribution back under the 68 is signifying that low volatility. Let me show you this. So right here, come and put it up on top. So right here, low volatility right there. So when the range expanded outside the distribution, that's when you got that break of that high, daily high. There was your break. So you can trade the range expansion showing the probability distribution for the daily 14 period versus 1. And let me get rid of all these lines. Know the difference that when you're inside the daily 14 period, you're going to have small range days. So when we put this on a lower time period, so you could say I was in this period, I'd be looking for um, any opportunity to go long. So any dip, right, on that 15-minute time frame back to like a daily one, or any dip below the daily one could be looked at as an opportunity to go long if you were looking to apply a trade like that. So I'm going to take this daily off. Okay, so here's the 15-minute. So it's the same concept on this also. The 1 period over your 14 period shows you when the bars might be moving versus inside. So when you're inside, it's a time to look for longs. But when you definitely go outside, this actually was a big bar that was contained inside. But here you can see you went long, and that's when it took off. Here we went long and it took off down. So it's very helpful to set up your charts to understand whether you're inside or outside your range opportunity. And that way you can help plan your trades. For the top part of the indicator, we can put the daily. So I have PT3 is the uh, daily. I can set it to daily 1 period open or close and hit apply, and I'll be able to add fibs if I want outside the distribution. And I can also add another instance of the same indicator on the chart, and this time choose daily close, and that will give me another set 1 2 3, and the algos will trade to both, so it's good to have them both on the chart. Looking for an instance where they traded to both, but Here was an inflection around the daily threes that went to hit the first target out. So on your fibs, you have control of where to put these measurements. 0.25, 0.75, and 1 will put you one half of the mean to 3 outside the 3. That's right there. 0.25. 0.5 is actually one time mean to 3 outside the 3. So measuring the mean to 3 and then carrying that distance outside the 3. And then 1.5 is, um, or 0.75 is one and a half times. 0.75 is one and a half times, and one time is actually two times up. So I know it can get confusing. We'll talk about it. But these are measured moves that I like. You can change it to anything you want. If you want to put it as a Fibonacci number, if you wanted to put it as 10, 20, 30, 40, 50, 60, 70, 80, 90, 100, you could put different instances on the chart and draw your plots. Here's an instance of it hitting both the daily three. See, it went to both. It hit the first one and then it went to the second one and then bounced and then came back to the daily three. So I think that NVIDIA is a real big tell for us. So we had I think a break in the market. We're going to look at a higher time frame. So back on our daily chart, let's put up some distributions so that you can see how to do this on top. So the first thing I'll want to do is put a 30-day. Hit apply. I'm going to go ahead and remove this yellow line. So that's a 30-day, and that's a calendar day. I have a template that I set up for calendar days, and I recommend that you do the same and get used to coding calendar days as dashes. That way you can distinguish that you're using a calendar day. And I'm going to go ahead and change this back to the open. So you can see these ones. Actually, we're going to put a monthly on top of it real quick, and then I'll talk about the individual levels. So I'm going to put a monthly one, and that's solid. So there we go. The 1 month. So there could be 20 days or 21 days or 19. It just depends on how many holidays were in the month. But you can see here's an example of it adhering to the 30-day one as support, went up to the next 30-day one as resistance, but it actually inflected off of this monthly one here briefly, that little doji, before it broke it and then came back, and then the monthly one again sort of acted as resistance. So the monthly and 30-day are something that you should put on your charts, and you can see we had a confluence of the 30-day one and the monthly one at 18,500, and it's turning around. So if we break this 17,500, you would expect a pullback. And so you can add other indicators to your chart to give you, an approximation of where those, dips might be. So people will like to use the 200 SMA. There we go. See how that was bought at this one? 200 SMA at the lower 30-day one. But if we come in, you can see that it's sort of leading up to the 16,886, 16,588, somewhere around here at this time. So it takes time to get down to a location. It just doesn't like go there in one day. I wish. But they will land at these support resistances, and I've got the lower monthlies are where I'm expecting to see the first touches, and then maybe the push to that monthly threes with this 200 somewhere around down there. Just to give you a benchmark to put on the chart. Do your own due diligence. But this, like I said, right here, typically is an area that you would expect to see that bounce. So, and there's a lot of optimism for AI and stuff like that. So there's no reason to believe that this time would be any different. But we have not had a pullback, so at least back to the upward 30-day one first, and then maybe a lower one. We'll see what happens. But to trade it, you can set up your template so that you're trading a representative time frame. So you can get the actual volatility window of your time frame that you're in. So like, say you want to be trading 15-minute increments. You can set this up to show you what the time frame was between 8:30 and 9:30, or since we want 15 minutes, 8:30 and 8:45. Calc on the open. And here we go. So this will tell you 23 points, 23.75 for 34% of the range, 47.50 for 68% of the range, and 66.25 for 95% of the range. So if volatility is inside, right, the range is inside that 14 period distribution, if your volatility is low and in here, right here, you see that? You're not going to want to be trading the 95% of the range because it's not going to reach it. You see what I'm saying? You're going to be wanting to trade the 34% or the 68% perhaps, depending upon the time that you're entering the market and how you time buying lows and how you conduct yourself within the distribution on the price chart. So conversely, if you are outside the range, then you would be wanting to look perhaps to trade to that 66 point target right here, 66. So you can measure, with a ruler, say 47.50, currently 47.50. So put 47.50 on the chart. It's 104. There we go. Oops, right there. So that's all it is. It's not much. It looks a lot more than that. So that's 68% of this expected range. So if we measure that with, we just measured it. If we calculate the 4 points or 4 ticks per point, that's 190 ticks at $5 a tick. So that's $950 a bar. $950 a trade. Did I do that right? 47.50. Yeah, 950. So So say you would have gotten this close right there. So on the next open, from the open down, there's target reached. From this open down, 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 target reached. It was the third bar, but it did get reached. And this open down, target reached. It was the next bar, but it reached. Target reached. Did this one reach? It just got there. Target reached, and then it turned over. And then you would have been stopped out. So that's how you can use, say, the standard deviation of the time period that you want to trade, 15 minutes, make it a time series. And if you wanted to get even more specific, you could, say I'm in the lunch period. I want to see, you know, 10 o'clock to 11 p.m. or 10 a.m. to 11 a.m. instead of 8:30 to 8:45, or I want to, the whole hour. Let me see what that whole hour range looks like, or the last hour of the day, whatever you want to do. So here's 10 a.m. to 11 a.m. And then you can say how many points on average will that change from that first 15 minutes. And a lot of the times it'll be a smaller range because the point ranges go down at lunch, and then it picks back up for that power hour going back into the day. But get used to the ranges, the time period that you're trading, whether volatility is inside the distribution or out. Have a range target to trade to, like a daily 1, 2, 3. Which brings me back to the higher time frame. We put the monthlies on here. You can do the same thing with weekly and quarterly. So we'll go into doing that and building templates and training. And I have templates I can share with you. Um, but just realize that this helps you find support resistance areas. You can also use this to set up areas for selling premium. So if you want to know where the lines are for the S&P 500 to sell those outside condors, let me show you. There are methods to doing this by choosing the time period that correlates to that option probability distribution, Black-Scholes. And you can set your daily ranges. Put a 14 on here. So here we go. So between this template would be your template to hedge your premium call spreads. And sell premium every week. So right now, if we were to go into our quick strike, open it up, I want to go to the end of the month or next week, or end of the month. I'm going to sell the 5200 call. So the end of the week is the 15th right here. And I'm going to sell the 5200 short call. And where's the monthly? I'm going to change this. So I'm going to look for 522 points. I just put that on a weekly distribution. So from the close or the open to the threes is 1,000 points. So that would be 2 times. That's probably way outside the realm. So 522. That would get us to the lower monthly one for sure. But this 30-day one, 555.75. So I would probably want to put the risk clearly underneath that. And so I'd want to start pricing, puts potentially for Friday 2 times maybe. So, yeah, that PT3, 16,588.25. Oh, let's put it back on. Yes, I never know what chart I'm looking at. All right, 200 points, 104, 200. So I think it'll be the same. That would take us down to the 30-day one. Let's see what the options are for the put. Way down here. That, yeah, that's may not be enough. $900, so that's pretty bad. Not too bad for a week. Um, Let's see what happens when I bring that in. $4,900 instead. Yeah, 4,900 would get 948. But I think I'm going to put it back on 48.50 because yeah, 901. Okay. So this will work out. So $900 trade, and the margin. Oh, let me go into the details. Sorry. Okay, there's a little icon. Sorry, changing. There's a delay with Skype. I apology. I'm trying to see how much risk was required for the trade. So the break-even points would be 48.40 and 52.09. 288 points. So double the range would be 200. I think that's a pretty good risk. A pretty good level to try. That downside, we'll have to keep an eye on it, but we can roll down the upside if necessary to create a lower break even. So if the trade gets challenged and it gets close to that 48.50, we can roll down the upside of the trade, and that would give us more cushion in case we did get a little bit of a bounce in here. But so I'm having a little bit of issues with quick strike. We'll try that another time, but you can see that selling premium can be profitable. That was one contract. Um, and you can do that, once a week. You can also sell a monthly one at the same time and then close it in a week. Or so we'll be doing more with our premium selling, and then call spreads also. When the price breaks out on the daily, we can do the call spreads. So here's a good example. A breakout to the upside and the price just really took off to the downside. And you can see right here where it returned inside the distribution, the market went up. All right, so you can save these templates anytime you put an indicator on the chart and you like, your monthly, weekly, or whatever. Just hit the word template and hit save, and then you can start naming your patterns that you set up so you don't have to recreate them over and over again. But it just takes a second to set it up. What can take a lot of time is setting up the plots the way you would like it with the color or horizontal line or vertical line. Um, you can get horizontal lines on these also. So, like on my PT3 distribution, instead of showing it as a square, I can show it as a horizontal line and it will go all the way one time across the chart. Let me pull up a horizontal template and I'll show you 30-day. Okay. There we go. Kind of hard to see because there we go. So here you can see that it's a horizontal line, so it would not show you what happened for the prior distribution like the square does. It only shows you the current distribution. So if I put a regular 30-day on here, change it to 30, so you can change the number of days, the number of periods. So here you see the reversal. So I think eventually during OPEX and expiration we could see the downside of this range or bounce on the 49.20 area. While I was in Quick Strike, I looked and saw that we could sell $900 worth of premium next week. I forgot to look to see on that quarterly contract where the volume was. So let's go back and look at that real quick. Oops. Alright, so I'm going to put this back on the, oops. $51.30 is the mean. That's right where we are. We're sitting on the monthly mean. And that lower 49.22, gamma is higher to the upside. But this 51.20 area, the 10 points away, 10, 20 points away, That certainly could get 49.22 rather. Okay. Way up here. So that's way out in the threes. Oh 05 delta. And there's a bit of put activity down here. The main put is at 5,000, so it's protected going into that contract into quarter. So that looks pretty safe. And the open interest is still to the upside, showing a 5,200 call wall. So that's interesting. I think that'll change Sunday. Yeah, the open interest change is all puts. They're leaving the calls and going to puts. See, they're dumping the 41.50 calls and adding puts. 51.50 to 49.50. So, all right, guys, that's it for me. Hope y'all enjoyed the video and understanding what I'm doing when I try to put my plan together for the next week to see how many points I have to get there. Is there a likelihood within, what's on the economic calendar? Where do I think price is going to go? And then constructing a trade plan to get there using the range and a 15-minute chart, and try to help plan trades, whether the range is expanding or contracting, and how many points do I have in that time frame that I'm going to try to reach. 34% of the range, 68% of the range, or 95% of the range. And I definitely would want the 1 day period to be well outside the distribution, to be going for that 95%. And you can see here that that range expansion to the upside would have reached the 95% of that 15-minute time period. All right, guys, thank you so much.